Hello and welcome. This is the Market Wrap. I am Agam Vakil. The major Indian equity indices advanced today, covering a majority of the losses that we saw them make yesterday. The Nifty advancing by as much as 0.8%, as you can see here, up 83 points, led by Bharti Airtel, up 4.2%. And then it was the heavyweights TCS and Infosys also advancing on the back of, well, a weakening rupee against the dollar. We also had strength in Axis Bank and Sun Pharmaceuticals. On the losing end, more weakness coming in for Tata Motors, down as much as nearly 7%. That's followed by ONGC, down 4.4%, and GAIL reacting to earnings, down 4%. Broader markets, well, the advanced decline ratio was largely evenly poised between the both, with in the one gainer as far as in comparison to one loser on the Nifty 500. Let's take a look at some of the gainers. We had Eros International, which advanced by nearly 20% in today's day of trade, and this was after we saw good earnings come through post-market hours yesterday. Kaveri Seed Company up 7%, Just Dial also up 6%, NCC advancing by nearly 9%. GET&D India, on the other hand, losing out on poor earnings. Granules India continues to grind low, now down another 7% at around 83, and Jet Airways also well, declining on the back of poor earnings. So we have seen mixed cues come in. We really haven't seen that turn when it comes to the advanced decline ratio towards those which have moved upwards. We're going to have to wait out for some of these variables to come through. That said, what are our technical experts telling us about the levels to keep an eye on the Nifty now that we've seen it move about 10,000 mark, 10,500 mark? Here's what they're saying. Listen in.
Right now, it's positive to focus on the bullish structure that is likely to gain more traction, and we don't want the correction to dip below yesterday's low. If it were to dip below that, the alternate bearish structure will get activated. So at the moment, we are maintaining our bullish stance, and we are expecting the market to trade higher over the next couple of days. And these next 3-4 sessions are going to be very crucial for the market, whether it's going to be the bullish structure for the short term or the bearish structure for the short term. So we are taking the bullish call and trying to go long on the market.
We might have seen a short-term bottom today, somewhere near 10,400, and I expect it to be range-bound at least for the next couple of days between 10,400 and 10,500. And above 10,500, 520, it can go another 100 points. So I would advise to go long on any dip with a stop loss below 10,380.
So we have seen a lot of weakness in some of these oil and gas companies, largely led by weakness in ONGC and oil. That's something that's also been spooking the markets to a certain extent. Let's get in Yatin Mota to understand the reactions and what's really going on with ONGC specifically. Yatin?
Well, Agam, if you look at ONGC and Oil India, both of these stocks went down as much as 10% in intraday trade, and the biggest reason why this happened was a PTI report which indicated that the government is looking to put something which could cap the upside for ONGC in case crude prices went up. There have been reports, and the PTI reports in particular suggest that there could be a windfall cess that could be levied on ONGC, and if that really happens, the profitability for ONGC could be limited. So this is probably the return of the subsidy structure that we had between upstream companies and downstream companies in the form of cess or some cap on the profitability. So if that really happens, since the government is finding ways to control the prices of diesel and petrol, this could be one of the mechanisms in which they could levy some cess or some windfall taxes on companies like ONGC and Oil India, and probably help the oil prices or the petrol and diesel prices get lower from the current level. So on the back of that news, we had both ONGC as well as Oil India in big pressure on huge volumes. Both of these shares fell over 10%.
Right. Well, sentiment is certainly worsened for both these companies. Thanks, Yatin, for bringing us those details. And of course, we are going to continue to track the movement of crude and what impact that can have on some of these companies that Yatin has spoken about. And speaking of crude, it is also bearing down on another very important sector in the equity markets, and that's the aviation sector. And we've had earnings from Jet Airways come through, a lot of weakness weakness seeping in as well. We have Darshan Mehta, who is going to take us through the reasons behind the weakness in Jet Airways.
Yeah, so basically, if you look at the numbers, there was a revenue growth of 9% that happened, but operationally it was extremely weak. We had more than 1,000 crore loss that came in, negative margins that came in, and basically, if you're looking at it, it was 8 straight quarters of gains, and this quarter was a loss. So basically, this loss was so high that it wiped out last 6 quarters of profits that came in. The management had said that because of the loss that was there, the net worth has become negative, and probably they anticipate some bit of problem, but they are looking at, there could be uncertainties, and they're looking at ways in which how they can improve, and that's also what the auditor had pointed out, that they need to get this done so that their net worth comes back into the positive. So the auditor has raised a bit of concern. There were 2 factors why operationally it went bad. First of all was the fuel cost. From levels of almost 1,500 crores a quarter, it went up to in excess of close to 2,100 crores per quarter. So that is a big jump that's come up 25% up, and even the other expenses, which include the forex as well as Jet Light, that has increased from 1,200 right up to 1,800. So that's more of a 33% jump that's come in. So these are the 2 factors that significantly impacted Jet's earnings. Now, if you look at earnings, Jet and Indigo came out with similar revenue number. While Indigo posted a profit of 2,200 crores, Jet has a loss of 700 crores in the full financial year. SpiceJet on a 1/3 revenue has posted profits of almost 500 crores. So it's very basically a Jet Airways sort of issue that came out, not something to do with the entire aviation space.
Right, there you have it, specific issues for Jet Airways. Thanks, Darshan, for bringing out those details. We will continue to track more developments in the aviation sector as well. And with that, it's a wrap on the markets, but don't go anywhere. Lots more lined up, so stay tuned in the Bloomberg Court.